Alright traders, welcome back to the channel. Just a very quick one right here. In this video, we'll be determining the weekly directional bias of the dollar, so we'll know exactly what other foreign currencies will be doing. Now, the dollar index is one of the major instruments that determines the movement of the United States dollar. It measures the strength, the performance of the United States dollar. You can find that on tradingview.com by simply typing DXY. You can actually see it right now. So once you found this particular asset, if you see this asset going up, it means every other foreign currency that is paired with the United States dollar. Look at this. You see Euro USD, GBPUSD, Aussie USD. You can see they have something in common, and that is the United States dollar at the right hand side. And if this particular asset DXY is going up, it means we expect foreign currencies that have USD on their right hand side to go down. All right, so that is the only reason why we use the DXY to determine the directional bias of this particular asset. So let's go into this simple weekly analysis to know where the dollar is going for the week. All right, so look at this. This is the monthly time frame. We're going to start from that. We see that this has been going up. Now let me show you something. This is what price have done in the past. Price has just moved up from here, this area, up to this level right there. And of course, price cannot keep on printing an upward candle forever. Definitely you're going to see some certain measure of discount coming in from this level. Let me just measure from here, swing high to this here. So look at this. Price have actually traded into this area. We don't know what price have actually seen in the past, but if you zoom in, you're going to actually see that price have traded into this very old bearish mitigation block right here. This one, a very old bearish mitigation block. Let me adjust it to this level and see if you can see what I'm saying. So price did not just quickly turn back and start retracing like that. It traded into this all-time bearish mitigation block confluencing with this fair value gap. All right, so what we've seen price do recently was that price has been printing these downward candles. As soon as we see price printed this 1, 2, 3 candle, we know that price is about to go down. And of course, we have actually seen that price have traded into the discount area from here to this level. Price have traded into the discount area. Where exactly? Into this particular fair value gap. All right, buy side imbalance, sell side inefficiency, that is ABC. All right, so price have traded into this particular fair value gap in discount area, and we can actually see the quick reaction and even confluencing with this old high. This is an institutional entry drill. So look at this. We're going to take this up to the lowest time frame we can see. You're going to see everything in synchrony. So we go to the weekly time frame and see what has also happened. So in the weekly time frame, price has just been printing lower, coming down to this level, trading below this, old low. Let me show you. Liquidity residing below here. And what price loves to do is to actually trade below the area to grab liquidity. So this is the weekly time frame. You see price trading below here to grab liquidity. And then also, as price was retracing, price also traded below here. Let me show you. Just trading below this level. Can you see? Just to have that liquidity area. Then pushing down again, still looking for external range liquidity, trading below here and even reaching up to this bullish order block. Even though price did not touch that bullish order block, but there is a fair value gap close to it that quickly pushed price. So everything is happening in fractal. You can actually see how price just touched the tip of that fair value gap and then quickly start pushing up. Now this is the higher time frame, and you can actually see a shift in market structure right here, which is suggesting that price has just shifted structure to move upward. Where is price going to? We are targeting this upward direction, the buy side liquidity residing here. All right, all the buy stops right above there, because we have shifted structure from downward movement. Now we are in an upward movement. This is a shift in market structure, as I told you earlier. Anytime you see shift in market structure, it means the downward has finished. Now we are officially going to go up as what? As buyers, which means the directional bias this weekly, we can actually see that price is bullish. All right, if we drop down to what? To the daily time frame, let's see what we will have right there. From this shift in market structure, price just retraced back into this particular fair value gap, and then it quickly shifted again, pushing up, retracing after break of structure, pushing up, breaking structure above here, pushing up. Look at the recent one here. We have broken structure just right above here, and price is retracing. Now this is the low. We have not shifted structure, which is telling you that price is still bullish. Price is still bullish. What is that telling you? All foreign currencies are going to what? Are going to be bearish, because the USD is on the left hand side. Look at this. There is a liquidity here that price have just peaked. That's why you saw this coming down. And above here also, there is another liquidity level right here. You can actually see this. Everything is happening in detail and in fractal. And right above it, the more reason why I know price will go up is this liquidity void above, and the liquidity that is residing above this very old high. All right, so we will target all this area. Price is actually moving to target those areas. Currently we can see that price has just retraced. Comparing the momentum of this upward candle with the downward candle, you know that price is still bullish, because just one candle has covered the 3 candle retracement that we can see in the downward direction. So let's see the lower time frame, the 4-hour time frame, and still confirm whether we are bullish or bearish. All right, look at this. Let me take out every drawing. Price has just broken structure from the 4-hour time frame. If you watched my video about counter trading, you will know exactly what is happening here. If you are wondering where the video is, this is the video. Please watch this video. It's very powerful. You will know exactly what is happening, or you can simply click on the link displayed right here, right above. So look at this. Price has just broken structure. That's an element of a continuation of trend. We have seen a break of structure, and we have what? We have an order block right here, just here. Close to this order block, we also have a fair value gap right there. Are you seeing what I'm showing you? Which price I've traded into? All right, but we still have a high right here. In this short time movement in the 4-hour time frame, DXY is bearish, which means if we go to foreign currencies like Euro USD, we're expected to see some certain movement in the upward direction, because DXY is trying, you can actually see all of them have reached the point of interest where the institutions will be fully ready to push back price. Let me take out this guy. This guy should be out. All these other ones, sorry, the chart is a bit rowdy. All right, so look at this. All this price movement you are seeing is actually as a result of that retracement in DXY. Euro USD also had a very brief break of structure right here, retracing back to where? An order block, bearish order block right here. This guy. All right. Did we touch the bearish order block? Yes. What we are expected to see is that this bearish order block starts pushing price downward. That's what you're seeing on DXY. So just follow everything I'm showing you right here. You're not going to miss anything. So this is it. Can you see this retracement? It will reach the point of interest right here, POI. We really did, because we are still in discount and we have touched this fair value gap. So what I'm expecting is for price to quickly move up to that level. But let's see if there is a shift in market structure in the lower time frame that will help us confirm that price is really going to go up in that direction. So look at this. This was the news that came in last week. So the news was so heavy that it pushed price up and it pushed price downward. There was an indecision in the news. That was why you saw that kind of happening. Price moving, shifting structure right here, which is an ideal time for price to quickly go up again. But it then came back straight downward to that area. And then this morning, look at what price did. This morning, there is a gap, new week opening gap, end walk right here, or what ICT simply calls vacuum block. All right, the gap has been filled. And this is the ideal way to see price start going up. All right, there is a gap. Price came back and filled the gap. Already we have traded into this fair value gap, and now price is pushing up in that direction. How about the 15-minute time frame? The 15-minute time frame is still telling you that price wants to go above, wants to go up. But because today is Monday, you may need to be a bit careful with trading, because there is a directional confluence on Mondays where the institutions are preparing for it. It's mostly the power of three concept happening. You will see accumulation, manipulation, distribution, and you will see price mostly create the low of the week, and then it quickly move up in that direction. But for now, I am so sure that the dollar is bullish. We have filled up the gap that the week opened, and now we are moving up to that level. Even shifting structure, just a shift of structure right here in the 15-minute time frame, coming back to this bullish mitigation block, confluencing with a small fair value gap right here. This is a small fair value gap. All right, and we pushed up to that area. So let's go to any pair. Now that we know that the DXY is bullish, we'll go to any pair of our choice. Euro USD. This is it. You can trade either Euro USD, GBPUSD, Aussie USD, any of these ones that you feel comfortable trading. So look at this. Can you see what I'm telling you? Price have just created a new week for movement. If you check from the daily time frame, you can actually see some elements of price pushing downward, and this is what we are seeing. Obviously, price is also seeing some nice areas. Money is residing below here, and this liquidity void, this is an imbalance that price cannot just let go. I am so sure that price will massively fall down even below this area. All right, so this is what price is doing currently. We are seeing this candle printing. We have traded into this rejection block, this particular rejection block. Price quickly traded and touched this rejection block, and now we are trading below. Let's check the 4-hour time frame and see. The 4-hour time frame is also telling us that we have traded into where this area, even though this other block has been mitigated, price have traded into it. We are seeing price coming back properly now, because this one has actually broken structure. This one, we have seen a break of structure, retracing above, inducement right here, picking up the liquidity, and now we have traded into this guy. So we are officially bearish right here. Okay, and the gap that opened today, if you drop down to the 1-hour time frame, you will eventually see price trading back into it, which is telling you that price is no longer interested in coming to fill up this gap, the new week opening gap, or the end walk. All right, or the vacuum block. So price is actually pushing to the lower side. All right, so you can look for an entry in this movement, maybe in the 15-minute time frame or the 5-minute time frame. So price is pushing downward, breaking structure right here, or shifting market structure right here. So if you want to take trade, probably price may return to this area. All right, price may return to this area, and then that is where you're going to be taking the trade. But normally, as Mondays, I don't normally take trades. If you want to put your stop loss with this kind of problem, it's mostly above here. All right. If you want to be very, very conservative, maybe you can consider this place and you will target this area. All right. So looking at everything I've shown you, you can use this same concept and check on the other currency pairs. Let me quickly let this video up for you guys so you can watch and see what exactly is happening in the market. Thank you guys for watching. See you. I will do this more often, almost every week, so you can see what price is actually doing. Thank you for watching. See you next time.